The best quality stock to buy and hold forever. This is a video that I don't do very often because I rarely find amazing companies that are worth holding for the long term, especially at this price in this specific market. But this is a stock I talked about many times. I used to hate the company, then I started loving it. Once I really understand the business and I bought a stake in the company, it's one of my core holdings. Around 9% of my portfolio. I'm gonna talk about it again as I believe it's presenting an amazing opportunity, and I believe a lot of investors are missing out on it just because they saw the stock trading lower a few days ago or a few weeks ago. And I don't like people making such mistakes, so I'm gonna talk about it again. I really hope you enjoy it. And this stock is ASML. ASML is still trading at the same price it was trading at in 2021, and a lot of people right now are skipping it just because they saw the stock trading at $670 or $680 a few weeks ago. And now it's trading at 776, so they believe they're too late and they're just gonna wait for the stock to go back down. Now, this is a big mistake that a lot of people make in the market, and it's called anchoring or having an anchoring bias, where they see the stock at a specific price and they remember this price. Then the stock goes up like 5 or 10%. They say, oh, I missed it. I'm too late. I just missed the stock without looking at the overall thesis. And then the stock keeps going up and up and up and up, and they're just stuck because they saw the stock at a lower price. This is a big mistake that Buffett made with Disney, and he made it, I believe, with Walmart and a lot of different companies, just because he got anchored at a specific price. But this price, in my opinion, for ASML is still very attractive, and I'm not the only one that believes that. Even the management themselves, they're buying the stock over here, over $330 million buyback at $730 per share. And this management team of ASML is very smart, and they believe the stock around $730 per share is a bargain, and they're buying back a lot of stock. And now the stock's trading around 770, and I still believe it's presenting a great opportunity. Now, if you want to invest in ASML or you want to research the company, I highly encourage you to watch this video on YouTube. It's called Why the World Relies on ASML Machines That Print Money. Something like that, or so. It's just amazing, an amazing kind of video, 18 minutes, and explains the whole thesis. But if you're buying ASML, you're basically owning the toll bridge to AI, the toll bridge to robotics, the toll bridge to smartphones, the toll bridge to the cloud computing, to data centers, anything you could want in terms of innovation, in terms of technology for the future. If you're buying ASML, you have the toll bridge to those technologies. All those technologies, they cannot be made without the ASML machines, where ASML has over a 90% market share with almost no competition. It's an amazing, amazing business. And I'm gonna read a few things from Fitch, which is a credit rating agency, and they did a lot of research on the company for them to rate their debt. And that was serious stuff. And this is what they said. They said ASML is the only producer of the industry's most advanced EUV lithography machine, and with about a 90% market share. They have over 90% market share in patterning, and this is one of the key phase for the semiconductor chips, with over a 90% market share. They have a few competitors, but there's nothing too serious, nothing really that could rival the company. Even in terms of other technologies, they're way behind the lithography technology that ASML actually possesses after spending billions and billions of capex to get those technologies. And this is what they said about alternative technologies. They said, we view alternative technologies as posing an only small and distant threat to lithography market leadership. All of the currently available alternative technologies, including nano imprints, are inferior in cost and yield in the mass production of advanced chips. So ASML, as I said, it's the best explanation that it's a toll bridge to the semiconductor industry. Any new fabs that wants to open in the United States, any new fabs that wants to open anywhere around the world, they need the ASML machines for those labs to do the semiconductors. And again, with a lot of the supply chain expanding in the United States, a lot of, the new president wants a lot more chips being made in the United States. Taiwan Semi is expanding more in the United States. All those things are bullish for ASML. Now, the last quarter was very good for the company, especially in terms of net bookings. It increased from $2.6 billion to $7 billion quarter on quarter. And this is very bullish in terms of a backlog, and sales were at record high, and everything else was very good for the quarter. One of the main risks for the company is that over 20% of their sales they go to China. And there's a risk that maybe China could potentially have their own technologies. Just like they surprised everyone with DeepSeek, they might surprise the world with some alternative to ASML. And then they will no longer need to order ASML, and they could lose 20% of their revenues. This is a major, major risk. Now, it was much, much higher, around 47%. But within the management's own guidance, they expected to get back to 20%. And Fitch expects China to be years and years, like a decade or two behind in terms of their technologies. And this is why they've been ordering the ASML chips. But ASML believes the United States is going to take more market share as a lot of those fabs are coming back to the United States, and that will make up for the loss of share in the Chinese market. So it's a risk to know about, and I'm not too worried, to be honest, and I like the company in general. Looking at price to earnings ratio, it's trading around 30 times earnings. Now, 30 times earnings on a historical average, if you think about it, it's really not too bad. The mean was 29 times. Now we're getting it at 30 times. The company traded as high as 47, almost 50 times earnings. Now it's trading around 30 times. But the difference between now and then is we have the CapEx boom for AI. And this is a trend that's going to last 10 to 20 years, in my opinion. And this is extremely bullish for ASML. Yet the stock is still trading at the same PE ratio it traded at in 2018, where we did not have all the CapEx and AI boom that we had. And again, the future is amazing, and I believe the stock is still mispriced over here. And what a lot of people are missing, as this is 30 times earnings, that includes very little stock-based compensation. So a lot of companies, they have 15, 16 PE ratio, but if you take the stock-based compensation, it's like 50 or 60 or 70 times earnings. Even Google has that, Amazon, a lot of different companies, Tesla. But if you look at ASML, out of $9 billion in free cash flow, they only had $172 million in stock-based compensation. So the 30 PE here is much more accurate than you believe. And again, I believe it's a bargain. But the second thing is the company has very high return on capital, around 40% return on capital, sometimes 48%. This is very high return on capital for a quality, for a wide moat company like ASML. Net income margins around 28%. They will likely expand to 30, 31% by 2029, in my opinion. This is very, very high net income margins, all that stuff for 30 times earnings. The company before that, over the last 10 years, or since 2014 pretty much, they grew revenue around an 18% CAGR. Earnings per share grew at a 22% CAGR. So 22% over the last 10 years. And over the next 3 years, the analysts are expecting the company to keep growing earnings per share 20% because of the CapEx, AI boom, and many different things. They're expecting 24% in 2025, 20% in 2026, and 20% in 2027. So you're paying 30 times earnings for a wide moat company. I say it's a toll bridge to the semiconductor, to innovation, to anything that's for the future. You own the toll bridge to the semiconductor industry with 48% return on invested capital, 28% net income margin, and 20% earnings per share growth, trading at a mean PE ratio. I believe ASML is one of the best quality stocks to buy at this price, and the chart is looking very good. It's making higher highs and higher lows. And to me, it looks like a bottoming out process, and the trend is very bullish from here. And I like the company in general. I believe 30 times earnings is not expensive. If the company remains at the mean PE of 30 times earnings, I would expect the stock to return somewhere close to its earnings per share growth of around 20%. So I would expect 20% per year from today's price with a company like ASML. And this is excluding a multiple expansion, of course, if the company does expand net income margins, which is very, very possible. So I really like the company. It's a buy and hold forever for me. Maybe there's nothing as forever, but I would say buy and hold for a very long time. And that's just my opinion on ASML. Not financial advice. Hope you enjoyed it. If you did, please press the like button and maybe consider subscribing. So I'll talk to you in another video.